Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Hinduja Brothers are said to be back in the fray for Jet Airways. That is a Bloomberg exclusive. Reliance Jio added nearly 1.5 crore subscribers in October, but Airtel took back the top position in the active user market share. Financial creditors to Diwan Housing Finance submit claims worth nearly 87,000 crore rupees. The RBI appointed administrator has admitted claims worth 81,000 crores thus far. An RBL bank raises 675 crore rupees through a preferential allotment of shares. The shares will be allotted to 4 investors. This news came out post-market hours yesterday. But let's first take a look at the trade setup for the markets. The US markets saw a bit of a minor pullback as we ended the year. I don't think too many people will complain. This could have happened any other day. And after a year which has seen such a stupendous rally, you could well be happy with such a move as well. But there was a minor pullback in the US markets in trade yesterday. And as a result of that, even despite that, we're seeing a bit of a mixed bag performance, but largely some bit of red on the Asian screen as well. So Hang Seng is down about 1/3%. Shanghai marginally in the green. The SGX Nifty indicates a start, which could be about 1/3% in the red. The key part, though, for the Indian market perspective is that while Friday was very strong and yesterday wasn't the strongest, the market breadth remained positive both on Friday and in trade yesterday as well. We started off with a gap up on the market breadth at the broader end of the spectrum, the NSE advanced decline, and that stayed that way. So the Nifty mid cap and the Nifty small cap indices outperformed in trade yesterday, which is a pretty good sign. And flows continue to remain robust. Or rather, don't continue to not be very negative, and as a result of that, the year-end flows look pretty solid. I mean, just look at what India has done in terms of both FI and DI flows, but a large portion of these have been FI flows, and it's the highest FI inflows that have come into India since 2014, and that tells you a statistic, doesn't it, that we may have had a year which is iffy, which had elections, which had a clutch of other political issues as well, but foreigners continue to see the brighter side of the Indian growth story, and that's actually positive. Now, a lot will depend on what banks do in the near term as well. We've spoken about this in the past, that Bank Nifty is finding some key crucial support at 31,500 to 32,000, that band. More importantly, technical traders believe that 31,900 is the key level from where the Bank Nifty is finding support. And if we manage to continue holding on to that level, people will likely remain positive on the Bank Nifty. However, today's stocks to watch are not necessarily about the large banking names, but a clutch of other names. We'll talk about some of them on First Word too, but just quickly, the stocks that might react at 9 or 9:15 today, I just want to give you a synopsis there. So the telecom data came out, which showed how Reliance Jio arguably has had, not necessarily the last laugh, but has a good time because they've added the most subscribers despite the price hikes taken in the month of October. So Jio added about 1.44 crore active users, which is the most in the last 3 years. Bharti Airtel added 68.2 lakh active users. This is the first time that Bharti Airtel has had a positive subscriber addition in the last 12 months, which should only augur well. Mind you, Vodafone, while it lost customers, didn't lose as much as well. So net-net, it's been a positive for all 3 telcos. But yeah, lesser of a negative for Vodafone, but Jio and Airtel both positive. Jet Airways could be an interesting stock. We were talking about it the last couple of days as to why is it that people might even see buying in this stock or see value in this stock to buy it. Now, today might be an interesting day because the Bloomberg News learns that Hinduja Group is preparing a bid to buy the company. The group plans to submit the expression of interest by the January 15th deadline. This is news reports to Bloomberg. Let's wait and watch if it happens, but it could well bring about activity in the stock today. Do watch out. Important story, news story, irrespective of what happens to the stock. I don't know how much interest is in the stock per se, but it's an important news story nevertheless. RBL Bank, as our headline stated as well, they've approved the allotment of 1.98 crore shares worth about 675 crore rupees at about 340 rupees per share, nearly 340.7 per share. Eastbridge Capital, FEG Mauritius, Ishana Capital, and WF Asian Reconnaissance Fund are amongst the funds that have been allocated these shares. So some more fundraising that RBL Bank has done and will get the monies for. Chalet Hotels, it's an interesting one. We'll talk to the company in the next couple of days. They've entered into a new defining agreements with Marriott International for about 1,500 plus keys. And that's a large addition to its total portfolio that Chalet is doing. Should be interesting to see what this one does in the session today. And last but not the least, in terms of stocks at least, PTC India Financial Services, we've seen how NBFCs largely have struggled with fundraising. Now, this company has received fresh sanction for a fresh long-term loan of about 500 crores from Bank of India for a period of 10 years. Maybe could augur well for this small stock. Last but not the least, not from a stock perspective, but from an asset class perspective, we've spoken about crude asset over the last few days. We've spoken about what's happening to equities. Just mind you, if you are a gold investor, you should be happy because I think gold is ending on a good note. It's been a great year and bullion is headed for the biggest annual gain since 2010. On part because of the risk aversion, in part because of dollar slipping as well. And all of that is leading to late triggers for gold. So, well, if you're an Indian, you should be happy with the kind of move that we've seen here. Okay, that's as far as the trade setup goes. What about the first word today? Jio added more than 1 crore subscribers in October, but Airtel beat it on a crucial parameter. Sumit tells us what. The Hinduja Brothers are having a rethink on Jet Airways. Biju George joins us for more on that. Yash and Nikki take us through the top and the worst mutual fund schemes of 2019, and Forum then sums up the year for media companies and the challenges they faced. Reliance Jio added nearly 1.5 crore subscribers in October this year. Mukesh Ambani's startup did lose out to Airtel on one front though. Sumit Sarkar is here with the details. Sumit, it comes at a time when Jio started charging for voice services, and yet it has managed to put up a good show.
Exactly. Despite introducing the IUC tariffs in the month of October, Jio still managed to add most number of active users on its network. As you can see in this chart, it added nearly 1.44 crore active users, which is the highest in the last 3 years, that is since it began its operations. As you can see here, 143.5 lakh active users added by Jio in the month of October 2019. Bharti Airtel, on the other hand, also managed to add nearly 68.2 lakh active users, which is the first time the company has seen an addition in its active users in the last 1 year. As you can see here, for the last 11 months, Bharti Airtel has been continuously losing its active subscriber base starting from January to November 2019. And the green line, that is what Bharti Airtel. And on the other hand, Vodafone Idea, if you see, they continue to lose active subscribers for the 18th consecutive month. However, at a slower rate. In the month of October 2019, Vodafone Idea lost only 7.4 lakh subscribers, which is the lowest in the last 11 months. However, the company has lost nearly 12 crore active users in the last 18 months. Now, moving on to high revenue generating customers, that is the broadband and the 4G users. Now, on that front, Bharti Airtel has yet again beaten Vodafone Idea. It has added nearly 50.3 lakh broadband users in the month of October 2019, which is the highest in the last 9 months. But Vodafone Idea also has seen some strong broadband subscriber addition in the month of October 2019, that is close to 36.1 lakh, which is the highest in the last 11 months for Vodafone Idea. Now, because of this massive subscriber loss, active subscriber loss that Vodafone Idea has been seeing in the last 18 months, there has been a major shift in the market share. And on the market share front, if you see, now Bharti Airtel has yet again become India's largest telecom operator by active user subscriber base. Its market share is close to 31.5%. And the second operator which stands here is now Reliance Jio at 31% market share of active user base. Vodafone Idea, which was once the largest telecom operator when it comes to active user base, has now slipped to the third position with a market share of 30.8% as of October 2019.
Wow, Sumit, this is interesting stuff simply because of two factors. One, that while Vodafone's losses have been the others' gains, their net loss numbers have been slightly better. It seems that that month was net positive for all the three, even though you could argue that Vodafone is still lost customers. Exactly.
It was better for Vodafone Idea because they have lost only 7.4 lakh active users. And on the broadband front, if you see, the addition has been good for Vodafone Idea also. Nearly 36 lakh broadband users, which is the highest in the last 11 months for Vodafone Idea, is also a good number coming in for Vodafone Idea.
Okay, I have just one small follow-up. If Vodafone has lost less, but Jio has added such a large number and Bharti Airtel too has added, does it mean the net subscriber addition has gone up, or is it is it some other factor that we can't quite decipher right now?
Well, yes, the net subscriber addition for the telecom industry has also moved up, and the major chunk of that has come to Reliance Jio. However, Bharti Airtel and Bharti Airtel on the other hand also managed to add some 68.5 lakh users, but the major chunk has moved to Reliance Jio of the new additions that have come in the telecom side.
Yeah, very interesting. So, I mean, it seems that while, the last question, it seems that while this was believed, Jio's plans were believed to be hurting both Bharti and Vodafone and the other incumbents, Bharti seems to be finding its mojo because it is adding subscribers, a bunch of other things working for the company as well. They are doing some talks of some further fundraising too. So they seem to be on the path of mend of sorts.
Well, yes, Bharti Airtel has been actually managing to stay in line with Reliance Jio. However, they have lost active subscribers in the last 11 months, but this month they have cashed up and added nearly 68.5 lakh. So their plans of not introducing IUC tariffs separately in the month of October at least has worked in favor of them. They have added 68.5 lakh, and also their improvement in network has also worked in favor of them, and that's the reason their subscriber addition on the total front has been higher when compared to Vodafone Idea. Also, if you see on the broadband side, they have been continuously adding more subscribers compared to Vodafone Idea, and that's mainly because of its good and better network when compared to Vodafone Idea.
Yep, thanks a lot for that, Sumit. Well, watch out for Bharti Airtel as a stock is too. I mean, the last few days, every time it sees a bit of a dip, it sees a bit of buying as well. It's somehow been steady northwards of this 435, 440 level. In yesterday's session too, saw a bit of a buying. Let's wait and watch what happens in trade today for Bharti Airtel. To my mind, that's that one telecom stock to watch out for. Okay, the other stock to watch out for might be Jet Airways because the Hinduja Brothers, excuse me, may be warming up to the proposal of bidding for the company, the airline that is. The London-based conglomerate is said to be working towards showing interest in the grounded airline, according to people in the know. Biju George of Bloomberg News joins us now with more on this. This is not the first time that Gopichand Hinduja Brothers have thought about buying Jet Airways, is it?
Oh, no, absolutely not. In fact, they were trying to partner with Etihad earlier this year. Obviously, the Etihad bid fell through, and that's when they backed down. But they're looking at coming in here again.
Yeah. Is this a standalone bid, or, I mean, what is it that we are learning about this bid? What's the nature of this bid likely to be?
Sure. So at this point, they're going alone, but they are looking at to bring in a partner. That's still a moving piece to this. At this point, they are exploring this alone, but the intent is to eventually bring in a partner.
Okay, and you would have, by virtue of having studied this, you would have some inkling about the rationale for the Hinduja Brothers wanting to do this, because, you know, all through this jet saga of the last 24 months, Biju, that we've seen, there have been voices for and against this airline. I mean, a lot of people talk about the high quality service that it had, but now that a lot of slots are lost, a lot of airplanes are lost, the kind of bids that come in for this airline also might dwindle down. What is it that, how is it that you would summarize this?
Absolutely. So I'd say that anyone bidding for Jet has to face a number of complexities involved in taking over the airline. Some of these are regulatory complexities, and those are things that any bidder would be having a conversation on. Obviously, a lot of the creditors are state-run creditors, and obviously there's certain incentive from the federal government to resolve the issue. So that's one element of this. The fact that you've run a process so far, there has been only one bidder, it's dragged on, and there's a push to sort of resolve this at this point, and that's kind of one of the incentives pushing a potential bidder in the hope that, you know, you get more regulatory forbearance, because some of the issues here are regulatory, both in India and overseas, and if there's more sort of, there are more relaxations from the Indian regulatory approach, then that helps the potential bidder. So that's one element of this.
Well, the next 15 days will give us the answer. Let's see.
Absolutely. Should be interesting.
Yeah, it should be interesting. Thanks so much for bringing us this piece of news. Well, that's the view from Bloomberg News on Jet Airways. It's an interesting story and a developing story at that. 2019, though, has not been a easy year for the mutual fund industry, be it the onslaught of heightened scrutiny on lending by fund houses or the standstill agreements entered in some cases. But like always, there are a few schemes that have managed to weather the storm better and some which haven't. Yash and Nikki are here to take us through the list of the best and the worst equity mutual funds of 2019. Yash, let's start off with the list that you have.
Like you rightly mentioned, Neeraj, even though the benchmark indices have rallied anywhere between 12 to 15% and are hovering near their all-time highs, most mutual fund investors are staring at fewer returns or even negative returns in most cases. And for a second straight year, we are witnessing the large cap schemes outperform the mid and small cap schemes. Now, coming to the individual schemes which haven't done well, and what we've essentially done over here is that we've taken the all India equity mutual fund schemes in the large cap, mid cap, small cap, and the multi cap category. And we've basically just sorted them in terms of returns. So the highest returns make it as the best performing scheme and the lowest return as the worst performing schemes. Now, in the large cap category, we've had JM large cap fund, which has given a return of only 5% so far this year versus the category average, which is northwards of almost 11%. Then we have two schemes from the Aditya Birla Sun Life stable, which includes the mid cap and the small cap scheme, which are down 5% and 13% respectively, versus their category averages being far higher. And then in the multi cap scheme, we have the Nippon India Mutual Fund, which has given a return of only about 1.5% in this period versus the category average, which is again substantially higher in this period. Now, let's look at the individual reasons which have gone behind this underperformance. And although for JM Large Cap Fund, all of its top holdings, which includes the likes of Reliance, HDFC Twins, Axis, as well as TCS, together accounting for almost 35% of its total holding, giving returns of anywhere between 17 to 37% in this period. The main reason for this underperformance is the likes of ITC, which is its sixth largest holding in its portfolio, having a percentage of almost 3.5% holding. That is down almost 15%, along with L&T, which has also bared down on its total net asset value, which is down almost 11%. Moving on to the mid cap scheme, and just to give you a sense of the route in the mid cap and the small cap space, over a third of all mid cap schemes in the have given negative returns on a year-to-date basis. So that's the reason why we've seen that underperformance from the Aditya Birla mid cap fund. And again, one of the main reasons for this underperformance is the likes of Team Lease, Federal Bank not doing that well, along with some of their large holdings, which includes the likes of Mahindra CIE, Bandhan Bank, and RBL Bank. So their largest holding in terms of sectors is banks. And at least I've named 3 banks over here which haven't done well, with RBL Bank down as much as 42% and holding almost 2.16% weightage. That apart, we've seen Exide Industries, Sun TV, Cadila Healthcare, as well as Tata Power adding further pressure, falling anywhere between 26 to 31% on a year-to-date basis. So their bets in these names, they haven't worked that well, and that's the reason why we've seen that underperformance come in. As far as the small cap space is concerned, over half of all small cap schemes have given negative returns year to date. In fact, even the category average was negative 3%. So that's the reason why we're looking at negative returns for this category. And again, we've seen the weakness come in as far as some of their bets, some of their top bets are concerned. Federal Bank is down as much as 7% on a year-to-date basis, along with the likes of Team Lease, which is also down 12%. But that apart, their second largest sectoral holding, which is consumer durables, that too hasn't done very well, because take a look at the returns of V-Guard as well as Bajaj Electricals. Bajaj Electricals is down 33% on year-to-date basis, and adding further pressure is the likes of Mahindra CIE as well as Tata Metallics, all having a percentage holding of more than 2% in their portfolio. And lastly, when it comes to the multi-cap scheme, now they have almost replicated the performance of the large cap schemes. They've given almost identical returns, but the main reason why this particular scheme hasn't done that well is again down to your usual suspects, which includes the likes of ITC as well as L&T. L&T holds a total weightage of almost 4.5% of its portfolio, and it's the 5th largest holding for the scheme, and that is down almost 11%, as well as ITC, which is also down 15%. Some more underperformance coming from the likes of Indian Hotels as well as Linde India, which are down anywhere between 4.5% in this period. So these are the main contributors, or which we could say the main laggards, which have affected the fund's performance.
Okay, on to the ones that have performed the average return in their respective categories in 2019 or beyond their averages. Nikki, what's on your list?
My list is not as vast as Yash's, because it's Axis, which is clearly across all the categories outperforming the other counterparts. Let's look at the list where we have all the players out there. You have Axis Blue Chip as the top contributor for large cap, outpassing the benchmark by a huge margin. Average category return is around 11.59%, whereas this particular fund has delivered roughly around 20% on a YTD basis. Mid cap, again, it's the same story. You have 11% return delivered, and the category returns overall is 2.3%, but then the outperformance clearly comes from the small cap, where you've seen a return of 19.15% from this fund as compared to a category minus return of 2.5%. We know how small cap performance have been through the course of the year, clearly reflecting on the category but not the fund is Axis Small Cap. And again, in the multi-cap list, there is no exception out there. It's Axis again, which is going to be featuring into the name of that particular outperformer list. But let's actually look at the composition and the reasoning as to why Axis has done exceptionally well. First, let's look at the blue chip category, where it's the 40% portfolio of this complete fund is in financials. That's one of the reasons why you've seen this kind of outperformance. 3 stocks based on the heavyweights that I've taken from the portfolio and their outperformance. These include the rights of the Reliance Industry, ICICI Bank and Bajaj Finance. You clearly are seeing good amount of traction coming in from ICICI Bank portfolio, where it's the second heavyweight in the fund, and around 7.6% contribution out there and more than 50% returns. Let's look at the mid-cap category, where Axis again has delivered a beat. It's the composition of InfoEdge, Bajaj Finance and Bada. It's the combination of both consumer durables as well as the financials essentially, which has driven the rally for this particular fund, the mid-cap category. And on to the small cap list, that's where the major outperformance has come in from. And this list, if you look at the composition out there, it's cement, it's chemicals, and also it's financial services. All of them, which is typically done well through the course of the year, has led to the outperformance coming in from the small cap category. If you look at the list, the top index heavyweight that I have picked up from the list of top 10 stocks, outperformance is coming from clearly Fine Organics, which is a 63%, just rallied through the course of the year, occupies roughly around 4.5%, and also JK Cement, which is up with gains of 62%. Now, do bear in mind the fact that out of the cement counter, it's clearly only JK Cement which has delivered returns in double digits A, and also returns of more than 50%. So this is essentially a reason why you've seen a huge outperformance coming in from small cap category. Last category that I have in my list is the multi-cap category. Now, back in the shows that we've been doing, most of the advisors have been advocating for this category because the kind of flexibility that the fund managers have to move across the category in itself, like the large cap, mid cap or small cap composition. But in this fund, you have 60% of the composition belonging to the large cap category, and financials obviously dominating here. If you look at where we're seeing the rally coming in from, it's clearly the Bajaj Twins and ICICI Bank, which are the heavyweights and have performed well for the fund as a whole.
Well, interesting that Axis has been at the forefront of almost all the better performing schemes and ends as the #1 across categories. I don't think I've seen such a performance by any fund house in the last few. So clearly they've gotten this right. Thanks, Nikki, as well as Yash, for putting all of that into perspective. The last piece on First Word today. The consumption slowdown in the Indian economy has directly and indirectly hurt media players in 2019. All stocks on the Nifty Media Index anywhere between 20 to 70% down for the year. Forum Butt is standing by with a roundup of why they have fared in this fashion. Forum, good morning.
Yeah, good morning, Neeraj. As you rightly said, the media sector was one of the worst performing sectors this year. So some of the larger companies registered negative returns ranging from about 20% to 75%. So the worst performing stocks in the pack was Zee Media, followed by Dish TV and Music Broadcast, all registering a negative return of about more than 50% this year. So this negative performance was basically on the back of ad revenue taking a major hit for the company. So as you all know, ad is one of the major contributors to the total income for the media players. Now, this was basically on account of the consumption slowdown on the key verticals, namely the FMCG, auto and real estate. The impact was across, however, all the mediums, like ranging from the broadcasters to the print, radio and cable operators. Now, let's look at some of the more specific factors which led to this negative performance for these players. Starting with the broadcasters, conversion from free to air channel to the paid channel impact impacted the ad revenues largely for these players. This also led to a drop in viewership for the companies. So the likes of Sun TV, TV18 and TV Today were the companies which were impacted the most from this. Coming to the radio, the industry as a whole contracted. One of the major reasons was on account of decline in government spends for these players. Decline in inventory is yet another factor which led to the negative growth for these players. For the print media like Jagan Prakashan and DB Corp, the decline in ad revenue was again due to the fall in government spends for the companies. Apart from that, the increased competition from the digital medium is what continues to be a threat for these players. Now coming to the cable and DTH operators like Dish TV and Hathway Cable, the companies were impacted on account of the increased competition post the implementation of new tariff order regime. The ARPUs fell for these companies considerably. What stood out, however, was the Jio's deal with the Hathway and Den, which altered the competitive landscape for these players. Also going forward, it is expected that these companies would face additional pressure due to sharp discounts from Jio. Promoter pledge concern is something which continues to impact Dish TV, however. Now looking at what stands ahead for these companies, for the broadcasters, ad revenue is expected to remain subdued going forward. The new tariff order, however, is expected to benefit or to boost the subscription revenue for these players. For the cable operators and the distributors, the challenging environment is expected to continue going forward. Increased competition from the digital medium will continue to hurt the print circulation. However, the players expect to benefit from the lower newspaper print prices going forward.
Yeah, well, they'll clutch at all the straws that they can in order to get these benefits.
Yeah.
But yeah, it's been a rather forgetful year for these media companies. Let's see if the next year bounces back. For an interesting analysis. Thanks so much for that. So, well, that's as far as the media space goes, and that's all that we have on First Word today. But lots more lined up for you on Indian Open. We discuss markets and macros as we wrap up 2019 with Mihir Vora of Max Life Insurance and Lodha Group's debt reduction plans with Abhishek Lodha. But after this break, a full tilt towards the day's trade.
Actually,